Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Today's video is just kind of like a random using. It's something that I'm sure a lot of people have noticed and definitely been aware of for a little while, but it it really does feel like the current tape is a little bit more of a new normal. And what that means, and I guess kind of using SMH as like a kind of like like a highlight of this idea is there's definitely a difference between a stock bouncing and a stock rallying. Okay, I know it kind of like interchangeable. People say one and the other when they're talking about like the stock going up. But what I mean is that using SMH here, this is the semi ETF, so it's the sector ETF for the chip stocks. We can see that, I mean, over the last year-ish, that there's been quite a bit of buying interest right around this 250 level, right? I mean, many dips have been bought. A lot of those bounces have been pretty quick, pretty sharp, and even 2022, when a lot of tech names were really rolling pretty aggressively to the downside, bounced off it in January, got down to it last Thursday, bounced again, right? But the environment right now is just that. It's more bouncing off support, like stocks that are oversold that are bouncing, right? They're kind of struggling to put in higher highs. They're kind of struggling to like stabilize and hold higher lows. And it seems that like the trade and really, I know a lot of people have probably already been like kind of like focusing on this, but again, I mean, it's like looking at a stock against like a level when it gets washed out, maybe looking for like a quick bounce, and just using SMH as a guide here. It's just you get a nice quick move, but then as soon as like the momentum dries up after that like 1, 2, 3 day rally, it just seems like the stocks are content to sit in like these lower ranges, right? So instead of like really focusing on like on breakouts and like bullish continuations, it's more about like waiting for something to get washed out into like a big support level, whether that's like monthly support, moving averages, etc., and then looking for like the quick recovery, because that just seems to be like the environment we're in, right? It's less about like looking for like what we saw in October or late last year, where it was like pulls in and then puts in a new high. Now it's like pulls in, bounce, lower levels, right? So it seems like we're settling into like this new normal of like lower trading ranges, and you have to like kind of like adjust your focus accordingly. Okay. So it's something that was on the top of my mind. I know, if you actively trade, this is probably something you've already kind of come around to, because you've been noticing that bounces can be quick, but like rallies are seemingly like fading at lower levels consistently on a lot of different stocks right now. So um, it's definitely more about just like adjusting those targets lower and being more content with like those fast snapback bounces, because that seems to be where, at least in tech land, it seems to be where a lot of the action is. All right. We'll see how the next couple of weeks go. I mean, Fed's Powell threw a little bit of a curveball today. Definitely could impact some things over the next 2 weeks. So it should definitely be interesting, but also could be a little bit different than I think, at least for me, what I was expecting over the next 2 weeks. So lots to kind of play out here. By the middle of March, the indices could be quite a bit higher, quite a bit lower than we're at right now. All right. So if you like this video and you're looking for more information about swing trading with options, please follow up with the link in the description of the video for more information on options and play. Have a great night, stay well, and I will talk to you all tomorrow.